Hi everyone, today we're going to take a look at Affirm stock and if it's time to go buy Affirm stock after some big news came out on Friday that they have just announced a partnership with Amazon. So we're going to take a look at this stock today. We're going to look at the news that came out on Friday and see what the future is for this company. So on Friday, Affirm closed at $67, but when it comes around to Monday, it won't be there for long. It will be shooting up probably to $92 after the news of the Amazon deal came out. So yeah, it looks like by Monday, it could be quite a volatile open. It could either move down a little bit from here, it could move up a little bit from here. We'll see. You can even see after hours there was the little shoot up and then it dipped and then there was a few more buyers coming in. So yeah, we'll see exactly where it will move or open up on Monday, but it will more than likely be higher. So this was probably the biggest news story I think of the stock market on Friday. I'd love to say it was Turtle Beach, that it could look like they were going to get acquired, but I have to say I think Affirm stole the show with this news that they were going to partner with Amazon. So Affirm is a stock that I've been actually tracking since it came onto the stock market. It came onto the stock market earlier this year and it was priced at like $40 or $50 and I was very interested in the IPO. Never bought the IPO because I tend to don't buy them. But then it shot up, it went up to $117, $120. Even I think it put in a 52-week high, you can see here, 146. And since then it has pulled back more towards the $60 range. But like I say, after the news that came out, we're probably looking at $92 or so when the stock opens up on Monday. So the news that kind of sent it higher was the Amazon partnership. So if you don't know what Affirm is, basically it's a buy now, pay later payment option. So soon what you will see on Amazon is the option to use Affirm, go onto the checkout and then purchase the product through Amazon, and then you'll be able to pay for that product in monthly fees with 0% interest rather than paying it in a one lump sum. Now it is worth saying that the partnership with Amazon is going to be for products or orders that are only above $50, and at the moment it is only going to be on the US side of things. So it would be interesting to see if they expand that partnership further, but even so, I think at a buy now pay later, landing that on with Amazon is huge, because what you're considering here with Amazon is you are pretty much having the giant of e-commerce. You know, what is the one partnership a buy now pay later company would want? It would be to have that partnership with Amazon. So I think this is the biggest partnership a buy now pay later firm could land, and they've done it. So when you think about the potential of how many of them orders could potentially go through Affirm, then you start talking, it's a lot of money. I think at the moment Amazon do about 450 billion in revenue, and I think on their Amazon products they actually do about 50 billion a year. So you start considering, okay, what happens if a firm can just take 1% of that revenue or even 5% of that revenue, and you start thinking what numbers they can start doing further down the line, especially if this partnership gets expanded further than just past the US side of it. This is a major partnership for Affirm, and this is going to see a big massive revenue explosion for the stock of the company in the next few years, and that's why there was that kind of reaction of the shares pumping up 35% after the close on Friday. But even realistically, you think the potential for this partnership and how this revenue will build up year after year is going to be very exciting. So even though you consider, okay, it's popped 35%, even then you can't start thinking further down the line than that. This is the number one partnership that Affirm could have got, and they've just got it. So this is amazing news for Affirm. Now previously to the partnership that Affirm had with Amazon, their main kind of partnership when they came onto the stock market was with Peloton. So if we were going to go on the Peloton website, you can see here, this is basically how it works. If I wanted to buy a Peloton bike, rather than paying the $1,350 up front, I could then pay £35 a month for a course of 39 months here, and I can pay 0% interest. So this is the really tempting part, is that going to buy a lot of these expensive items and I can basically pay the same price for them, but then split that up into very small amounts across a longer period. So you can see this is why this is so tempting for people to get a lot of these expensive products for exactly the same price, but spend it or spread it across a course of a couple of years. Now, one of the biggest weaknesses Affirm actually had is that so much of their revenue actually came from Peloton. They do have a lot of customers, a little bit of smaller customers like Walmart, but they don't really push it as much. Expedia. The biggest kind of customer they had was Peloton, and people, because Peloton make it very clear that you can, like I just showed on the website, it's so clear that you can spread this a big expensive cost over a course of a couple of years. And that's a lot more of an attractive option, where it's a little bit more hidden on the websites. But because of that, what happened with Affirm is it made up a massive amount of Peloton's revenue, which was 30%. Now this has been decreasing, which is good, but there's always that little bit of thing of, Peloton is a massive part of Affirm's revenue. And to see some more partnerships come in that will, especially Amazon will make a big chunk of that revenue up now. So just seeing the revenue for Affirm get spread across a lot more companies is a lot better. But you've seen this from a lot from Affirm, is that because Peloton makes up 30% of Affirm's revenue, is that if you ever have Peloton pull out bad numbers, which if you saw Peloton's earnings last week, Peloton's earnings were awful, and because their earnings were awful, you see the Affirm stock actually dropped 2%, I believe, after Peloton's earnings, because everyone looked at Affirm going, well, their earnings are going to be bad now. So it's good for Affirm that they're kind of now diversifying their revenue a little bit than just being from Peloton. So this little addition here will kind of get one of them worries a bit away from Affirm. Hopefully though, Amazon now, because it is such a massive partnership, hopefully that doesn't take up a massive chunk of Affirm's revenue. But yeah, that's another great thing for Affirm. Now, one of the other companies that has now helped diversify Affirm's revenue from just being Peloton is Shopify. So a lot of its revenue now is coming from Peloton and also Shopify, because what Affirm are doing is with Shopify, a lot of their merchants can add in now the buy now, pay later, and Shopify use Affirm to allow their buy now, pay later. So the Shopify, if you go on a Shopify website, and you go on the Shopify Pay, that is powered by Affirm, and that's one of their new clients that help kind of bring that revenue, that's kind of where everything's coming from, and that it's not just coming from Peloton. Shopify is now making a good chunk up of Affirm's revenue, and also that's going to have a massive amounts of growth because this only came in recently. Now what's really interesting is I actually never thought I would see Amazon partner up with Affirm because of this reason. If we actually have a look at Affirm's ownership, if we can go in here, the second biggest holder of shares in Affirm is actually Shopify. So Shopify actually own 7% of Affirm, which is really interesting because, like I said, when you consider now that Affirm have now got a partnership with Amazon, and you think, okay, Amazon and Shopify, they're kind of two rivals here. You've got Amazon that lets sellers come onto their website and sell through the Amazon website and take a decent cut of their sales, or what they can do is rather than selling on Amazon, they go to Shopify. You go to Shopify, you build a brand up, and you get to you don't lose that cut to Amazon. It's kind of like the two different e-commerce sellers kind of battling away with each other, and the fact that obviously Affirm, Shopify have a very strong partnership, that strong that Shopify even own a part of Affirm's revenue. I never thought for a million years I saw this one coming, because I thought, well, I wouldn't see Amazon choose to partner up with, give some of their percentage of revenue to potentially Shopify, which is the really scary thing. So it's really interesting. It'd be very interesting to see how this develops as well now, because I would have thought Amazon would be looking to partner with someone else, maybe a ClearPay, an Afterpay, someone like that. But to choose Affirm was very, very interesting, I thought. So yeah, very interesting there. It'd be very interesting to see how Amazon handle that now. It'd be very interesting to see if Shopify are looking at this going now, thinking, okay, if we actually increase our stake a little bit here in Affirm, we start to take more potential revenue from Amazon and take some of their revenue as well. So it would be very interesting to see what kind of goes on that ownership front as well with Affirm now, which is one thing to keep an eye on, which is, I would say, definitely a bullish point for Affirm, that you kind of have these two giants of e-commerce that are both very interested in your company. Now, like I said, Affirm is a buy now, pay later, which is very popular, especially with a lot of the younger generation coming through, is to use buy now, pay laters rather than credit cards. And a lot of the younger generation are using Affirm to buy their products. And also, obviously, it's 0% interest as well. So you're basically paying the same money, but spread it over a course of a couple of years rather than a big lump sum up front, and that is very appealing to a lot of the younger generation. Affirm itself make a lot of their revenues from the actual transaction fees, so just like credit cards or Visa. This is very interesting that you're considering that Affirm is kind of now looking at maybe battling away with the likes of Visa, and that they take, if you buy something for $1,000, they take a little transaction fee from that, and that's how they make a good 40% of the revenue. But another 40% of the revenue comes from if you can't make up your payments over, so if we go to the Peloton bike here, you can see here, if you can't make your payments up across a 39 months period and you need to extend that, say, to a 50 months period, then they start charging interest, and that's where Affirm make a bit more of the money. So that's where you kind of make a bit of, it's basically a bit more of like a credit card company really, is they kind of make a bit of money from interest if you need to go longer, and also take a little bit of money from that initial transaction fee as well. What is very interesting with Affirm though is they are actually introducing a new Affirm card. So pretty much like a credit card, is you can take this Affirm card to a shop and you want to buy something, you put it on your Affirm card, done, buy now, pay later with that as well. So basically Affirm is a potential competitor to the likes of Visa now, where Affirm could be taking a lot of transactions from just your daily life, use your Affirm card and pay out. So this could be a serious game changer in the space of fintech. And just to point out how big this buy now pay later service is going to be and how much it is going to grow over the next few years, especially with the younger generation, you can see here BNPL, buy now pay later services, are growing at a rate of 39% a year, with its market share set to double by 2023. By then, 3% of the global e-commerce spend will be through buy now pay later services. What's more, 85% of customers who have used BNPL services plan to continue doing so in future. So this is just proven that so many people, especially a lot of the younger generation that are coming through, rather than going to credit cards, using buy now pay later, especially like an Affirm card, and paying through their 0% interest, spread the costs, and they are growing at a huge rate of 39% a year. And also when in 2023, if you consider 3% of global e-commerce will be spent through these services, you start thinking about, okay, Peloton, obviously it makes a good chunk up. I think it's a lot more than 3% with Peloton, but then you start thinking, okay, just daily expenses like going to the supermarket, for example, but also, Amazon, if you think about, okay, if a firm takes 3% of Amazon's revenue, as well as Amazon's growth, that's a couple of billion every year. Same with Shopify, start taking 3% of their revenue a year, and all this little percentage of revenue is going to add up a huge amount, and it's still going to continue to grow. So this space in general is a massive growing area, which is very, very interesting. Now, these two main risks that I do see with this company, first of all, is regulation. At the moment, a lot of this buy now pay later has had zero regulation at the moment, and that's one thing that could change. It could change that there's a few more tighter checks on a lot of these buy now pay later services, and that would be something that I see could maybe affect the growth a bit further down the line, and that would be something just to keep an eye on. But how much regulation comes in is up for debate. I think personally there won't be too much, but you just have to be aware that that could be something that does come in. And obviously is the competition. With a growth space like this, obviously to get into a buy now pay later, set a company up isn't the hardest thing to do. It's not one of those that to get started is quite easy, and it's very hard to kind of build a moat. The big way to kind of build a moat in this sort of industry is by kind of getting them deals with Amazon, with Shopify, with Peloton. But even if I go to Peloton here that I showed you a little bit earlier, just for example, I use that example for Affirm, but because I'm from the UK, what I'm seeing right now is that actually this isn't Affirm, it's by Klarna, which is one of their competitors. So actually, where it would say Affirm in the US, you can see here for Peloton in the UK, they've got a different partner, which is exactly the competition that's kind of going on here. There's going to be a lot of competition in this area. So you've got Affirm that's kind of trying to take a lead. Obviously, as you can see here, the bigger one in Europe, for example, which is Klarna. You've got Afterpay, which has just been bought by Square, so they're going to be major competitors. PayPal potentially, but they at the moment I feel are a little bit like behind the game, as PayPal normally are, to be fair. And there's potential of Apple coming in this area. They look like, I think it's Goldman Sachs. Yes, it is Goldman Sachs. I just had a quick Google there. Apple and Goldman Sachs potentially could be working together to kind of build up a buy now pay later company. So that would be very interesting. What is also very interesting, it's worth noting on here, that Apple are potentially looking at Affirm for as a buy now pay later option for their iPhone 12, and I believe that's going to be in Canada. So it's very interesting that even though Apple are potentially making a rival, they're allowing Affirm to use their buy now pay later services for their iPhone 12. So it's very interesting to see why Apple are kind of doing that, but then also allowing them on their products. And once again, if you have Apple, if Affirm do get Apple, that would be another major contract for them once again, which would help diversify the revenue. Now, I've got to say here, just a little bit of point, I'm going to go a little bit off topic on Apple here. I never kind of get this with Apple. Apple are looking to make a buy now, pay later company. And I've always kind of said Apple have an amazing balance sheet. Instead, they always spend it on dividends, always spend it on buybacks. Rather than doing that, Apple, rather than working with Goldman Sachs to kind of get a company here, I never understand why they just don't go out and buy a firm. They've got the balance sheet for it. It would help the growth. It would help with the iPhone sales. It's just crazy. And this is always why I've never really invested into Apple, because I feel like they're so lazy with the balance sheet and acquiring companies. I think this screams a buy for Apple, but hey, once again, they're not buying it. But that was just a little bit off topic on that one. So I guess the last little bit is the valuation side of it. At the moment, it was valued at 2.9 billion in 2019. So 2 years ago, 2.9 million. If we go on today's prices, it is valued at 18 billion. So there is a massive jump here on the value side of it. Obviously, the valuations jumped 10x in 2 years, which is huge. Obviously, when you got a massive growing space like this, it's definitely not going to be valued at the same valuation it was valued at 2 years ago, but it does kind of show you, wow, the valuation is a lot richer than where it used to be, and that's a big massive jump. And I think that is the big question here with the valuation. And if we just flick on the price to sales ratio, it's currently at 20. It will probably be 30 by the time it opens up on Monday, which will be the highest valuation it's ever traded at. And compared to its 2019 valuation, for example, that was only 10 times sales. So it is very, very rich at the moment, which is the only little downside here is how much it's jumped on a valuation point of view. But if we just go on to what the company is valued at here, so the previous financial growth, you can see here the growth is fantastic, and we're looking 600 plus million here, going on to $1 billion next year. 1.4 billion. The growth's fantastic, and you potentially think about the Amazon partnership here, the numbers could be even higher than where it is right now. Now, the one little flag that I would say here is that you look, one of the things that has always gone to Affirm is when they're going to start making money, and you look here and go, okay, the losses are decreasing here. Gone from 134 million loss, 125 million loss, even got down to 81 million loss, but then you go, boom, there's a massive loss here. Why is this loss kind of happening? Now, interestingly, I've actually gone through the financials very quickly, and they've acquired a company recently, and also there were some charges because of the IPO. If it wasn't for the IPO and the company they acquired, their earnings would actually only been around about a 50 million loss, which isn't too bad, because then you would start thinking, okay, once again, the losses are getting smaller and smaller, 80 million loss down to a 50 million loss. So actually, when you look at this, it's actually not too bad. The money they're losing, you always got to look at a lot of these companies and go, but when's it going to get to profitability? And I actually look at this company and think, actually, if it keeps shrinking its losses, and if it wasn't for them two one-time charges they had, once again, the losses would not have been too bad. And realistically, this could actually be a company that actually squeezes a profit, I would say, in potentially 2 to 3 years, which isn't too bad. Now, if we do go on to the financial health of the company, not too bad. I mean, it's got 84% debt to equity, which is a little higher than what I would want, but assets do outweigh the liabilities in the short term, as you can see. And if you look at the balance sheet, it has 1.6 billion in cash and 2 billion in debt. So cash to debt, not too bad. And as well, the thing with these sort of companies as well is that these companies never have two amazing balance sheets, because when you're kind of in financial services, especially when you're lending money, the more you scale, the more you're lending money out, the more you need to raise capital to cover kind of that money you're lending in the short term as you expand. So you're always going to have not very clean balance sheets in these sort of industries, but the balance sheet in general isn't too bad at all. So what's my overall thoughts with Affirm? I'm actually a major fan of this company. I was when it IPO'd, and now it's got the Amazon deal. I think that's a game changer when you consider the potential of that deal just in the US and worldwide. It's going to add a lot of revenue to the company, as well as the growth that it's already in, and it probably will sign more major partners as it grows in the next kind of 2-3 years as well. So you consider it won't be too long until we see Affirm probably announce a partnership with some other companies as well, and that probably reflects in the financials. I think what you see here with the financials as well is in my opinion, they will probably go and beat them financials because this space will grow a huge amount. And the thing as well is that I've got to consider with Affirm at the moment is it's in a hot space. And the one thing that I have, two reasons why I probably haven't bought this company at the moment is obviously it's a weekend, so I can't buy on a weekend. But when it comes to Monday, I don't like buying companies as soon as this good news comes out and it's jumped in share price. I try and wait a little bit and see if it does have a little bit of a 10%, 20% pullback, and then maybe buy there. So that's probably one thing that I'm waiting for. The other thing is the valuation. The valuation is very, very rich. But I've learned this from previous companies, Shopify, Square, in massive growing areas. Sometimes you look at a company like Affirm and you think, okay, is this space hot? Yes. Is it going to be a hot space in the next 5-10 years? Yes. And I start looking at Affirm and you start looking going, it's a very rich valuation, but when you've got a company like Affirm and they grow their revenue so fast how they are doing, that valuation just drops so quickly that eventually what happens in a year's time is the stock goes up a crazy amount and it's still trading at roughly the same valuation because the growth brings the valuation down and it still brings the buyers in and it stays roughly at the same valuation. And sometimes with these sort of companies I've got to think, is this going to be a great company in the next few years, even though it's a rich valuation, which I think Affirm is a great company and will be very hot in the next few years. So it's very high on my buy list, but at the moment I won't be buying, but I've got a very close eye on it because I think the Amazon deal is a massive game changer for this one. And same again is like this sort of like industry that Affirm are in. I like buying a lot of technology companies. I like buying a lot of finance companies, fintech companies as well. So what Affirm are in is the kind of industries that I like buying in. And I look at Affirm and I can see that this is going to be a very good company in the next 5 years, even when you consider the potential regulation risk and you also consider that there will be a lot of competition in here. The thing is you look at Affirm, it's at the end of the day, it's going to be payments. Payments happen all the time, whether you want to treat yourself or it's for essentials that you need in life. People are always going to do transactions. And as well, when you consider the amount of transactions that will happen through e-commerce, the thing is with Affirm as well is it's going to not even just be e-commerce. E-commerce is going to grow huge and Affirm will take a massive potential of that. But the thing as well is that you consider that Affirm bringing the new card out, it's even going to be, in-store transactions that Affirm can potentially take as well. So yeah, it's very exciting. And I think that when you look at the kind of companies like Visa, like MasterCard and credit cards, you look at Affirm, this is kind of like the new disruptor coming into this area, I guess. And when you have a disruptor like this, it just reminds me a lot of a Square 4 or 5 years ago, and the potential as well as the other kind of what Affirm could build onto this as well. Just from buy now pay later, they've already added in a card you go use, but they could add other features in as well, and that's what Square did, and it came very successful. And I think as well, the other interesting thing you added here is the potential relationship that you have with Amazon and Shopify. I think both of them companies are going to be very interested in having a stake in a buy now pay later company. Obviously Shopify have one in Affirm and I can see them increasing that stake, but Amazon as well, it would make sense at some point for Amazon to kind of bring that in-house or own one or own a stake in one as well. So yeah, it's very interesting. It's a very interesting area. I'd be interested to know your views on it as always, and let me know in the comments. But yeah, hit the like button. I hope the video was useful and I'll see you in the next one.